Good news, 5-year fixed-rate personal loan interest rates are falling. Personal loan interest rates fell for 5 years. The good news is that the personal loan interest rate has fallen for 5 years now. The bad news is that this was expected after the Reserve Bank of India, RBI, announced its decision to allow banks to pass on the benefit of their lower-cost deposits to borrowers at the time of personal loan dispersal. At present, the RBI does not permit any bank to charge more than the benchmark lending rate in the case of home loans and rupee loans, which means that the lenders cannot raise the interest rate on these loans beyond 8%. However, there is no such restriction on the rates for personal loans. Auto loan interest rates have been reduced. The auto loan interest rate has also been reduced by 1 basis point to 9.40%. Banks have already begun to extend credit at rates of 9.50% and 9.60%. respectively. Auto loan interest rates have been on the rise since last year due to rising inflation and weak economic conditions, leading to a record high of 11.04% in July. Interest rate cuts for housing loans. The interest rate on a home loan was reduced by 0.25 percentage point to 8.75%. In comparison to the earlier rate of 9.35%. The new rate is still higher than the current market rate of around 6.5%. The housing loan interest rate had remained steady over the past few months because the banks were reluctant to take advantage of the RBI's move to reduce the repo rate. The interest rate cut for 10-year fixed loans. People who are looking to buy a house should opt for a 10-year fixed interest rate loan instead of an 8.5-year fixed rate loan, since the interest rate on 10-year fixed rate loans is lower than that of 8.5-year loans. People would get more benefits. However, the 10-year loan comes at a premium price. The best option for them would be to secure a 12-year loan. Loan for self-employed individuals. Self-employed individuals can avail loans from banks at much lower interest rates today compared to 3 years back. The self-employment loan interest rate has been lowered by 2 basis points, while the loan offered to salaried employees dropped by 4 basis points. For those self-employed professionals who do not have other dependents, they can still apply for a loan of between Rs. 25 lakh and Rs. 50 lakh. Interest rates on home equity loans have been reduced. The interest rate on a home equity loan has been reduced by 0.25 percentage point to 7.25%. People can avail of this scheme if they have taken out a mortgage for their house. If you want to take out a home equity loan, make sure you look for the right lender. You need someone who understands the risks involved in such schemes. There are many factors which determine the return on investment on home equity loans, so choose wisely. Lowest mortgage interest rate. In general, people opt for home loans to buy a property to live in and invest in asset classes like gold, real estate, etc. If you wish to get a home loan to invest in, then you should carefully consider the interest rate before taking the first step towards buying a property. The current lowest home loan interest rate is 7.50%. Good news, interest rates on 5-year fixed-rate loans have dropped. The Federal Reserve Bank of New York announced on September 4 that its benchmark lending rate had been reduced to 2% from 2.25%. The first decrease since November 2008. Mortgage applications rose in August, while jobless claims declined. These developments suggest that economic conditions are stabilizing around their current level, according to the Fed's Beige Book report. Credit card rates increase for variable rate loans. Interest rates on credit cards jumped again last month after 5 consecutive monthly decreases. While card companies have been making less money off consumers' purchases, they've been passing along some of that savings to borrowers. The average variable APR on a balance transfer increased to 14.21% at the end of July, up from 13.91% in the prior period. The average variable APR for any unpaid balance was 15.39%, an increase from 15.10%. Good news. Loan approvals are up again. Lenders reported increases in the number of applications received for both conventional and government-backed mortgages and home equity lines of credit. In fact, The rise in mortgage approvals hit a record high of 1.03 million applications in June. That compares with 863,000 applications a year earlier. Bad news. Home sales continue with the slide. Sales of existing homes fell 9.6% in August compared to July, to a seasonally adjusted annual pace of 6.13 million units. Sales were down 11.8% year-over-year. Meanwhile, sales of new homes plunged 16.1% in August, falling to an annualized pace of just 700,000 units. That's down 23% from a year ago. Good news. Unemployment claims have dropped. Initial unemployment insurance benefit claims totaled $43.8 billion, the lowest amount since March 2000. The Department of Labor said September 4 that claims fell by 39,000 to a total of 280,000 on the week ended August 19. Bad news. Job growth disappoints. Employment gains slowed in August and were weaker than expected. According to payroll processor ADP, private businesses added only 71,000 jobs in August, lower than analysts' expectations of 80,000, and the unemployment rate ticked up to 4.9%, edging above September's 4.8%. Good news. Gas prices have dropped more than expected. Oil prices dropped below $50 per barrel in late August and early September, as the market responded to the weak core economy. Since then, however, oil prices have rebounded above $50 per barrel, mainly due to supply concerns. On Friday, August 31, the price of WTI crude was trading at about $49.80/barrel, according to the U.S. Energy Information Administration. Good news. 5-year fixed-rate personal loan interest rates are falling. Good news. Interest rates have fallen for 5-year fixed-rate mortgages. You'll be able to access lower rates than ever before. As we've seen over the past few years, interest rates tend to move higher, sometimes dramatically higher following recessions. But the economy is gaining ground again, and mortgage lenders have been reacting by lowering their lending standards and offering better deals. Mortgage experts expect to see many more people taking advantage of these offers and refinancing homes at historically low rates. If you're interested in getting a home loan, now may be a good time to start looking. Lower rates for 5-year loans. At the moment, you can get a 5-year fixed-rate loan with an APR, annual percentage rate, as low as 4.74%. That's down from the previous record low of 6.49% back in September 2016. It means that if you lock in the right loan today, you could be paying less than half of what you would have paid just 2 years ago. And if you're comparing loans, make sure you look at the APR first. A lender might say they offer the best deal, but if the APR is much higher than others, then you're not saving money. So check out the current rates and compare them to what you were paying last year. Then go online to find out how long it will take until you pay off your chosen loan. It's always a good idea to know when you need to repay your loan. Lenders' reaction to economic recovery. Many banks and lenders have reduced their borrowing costs due to strong consumer demand and confidence in the UK economy. These changes in interest rates are meant to encourage borrowers to refinance their existing home loans. Banks and lenders say the drop in interest rates should benefit both homeowners and investors. Borrowers who want to take out new loans should shop around for the best rate. But don't worry, even if rates do rise, you've still got plenty of time to lock in a great rate. Refinancing only happens once per year, and lenders are unlikely to raise rates any further for several months. 5-year fix versus 3-month fix. There are 2 ways to get a longer-term fixed-rate mortgage. One option is called a 5-year fix, while the other is a 3-month fix. This is because 3-month fixes give borrowers more flexibility about when they take out their loans and when they pay them back. Some borrowers prefer a shorter period of time, however, because it gives them less financial security. If you're worried about being locked onto a mortgage for a few extra months each year, talk to your bank or lender about switching to a 5-year fix. It shouldn't cost you anything, and it won't affect your credit rating. There is no penalty for extending the repayment period. If you chose to change the length of time you plan to pay off your loan, there's no penalty for doing so. However, Some lenders charge a fee if you switch from a 3-month fix to a 6-month fix or vice versa. If you decide to extend your loan beyond the standard set amount of time, usually 25 years, you'll likely have to pay a lump sum of interest. Don't worry, this isn't as big a problem as it sounds. Most lenders require customers to pay back the full value of their original loan by the end of the extended payment period, even if you have to pay upfront. It's worth the peace of mind knowing that you're free to extend the length of your loan without having to pay penalties. Good news, 5-year fixed-rate personal loan interest rates are falling. Interest rates have been falling rapidly over the past few years, as we see in the chart below. However, as of November 2017, interest rates have fallen again. See above. Here's what you need to know about paying back your personal loan. Loan amount. The first thing you should consider is how much money you can borrow and still pay down your loan in 10 years. Remember that if you don't start making payments immediately after getting your loan, you could end up paying more than you would have to if you had taken out a larger loan. Here's a quick exercise. Take your annual income, $40,000, and divide it by 12, the number of months in a year, then multiply by 0.02, a small fraction you'll use later. That's $350 per month. Subtract $150 from your monthly payment at the beginning of each month. This is your minimum payment, and multiply your remaining balance by 1.05, 10% plus the 2% you're using for fees, divided by 12. That gives you the number of monthly payments you'd be able to afford to make in 10 years. If your monthly payment was $300, your total debt burden would be $25,700 before fees. Fees are pretty straightforward. They're everything you pay beyond the principal amount of your loan. They don't include any monthly charges, though. You might find some lenders charge a fee for applying for your loan, but once you've got approval, you won't pay any additional fees until the due date of your first quarterly installment payment. After that, you'll pay interest only on the unpaid portion of your loan. It's also worth noting that if you want to repay your loan faster than 10 years, you may not get the lowest possible rate because many people choose to spread their payments over longer time frames. That way, they can pay off their loan sooner without having to sacrifice extra savings. Good news. 5-year fixed-rate personal loan interest rates are falling. You don't have to pay high interest rates to get a home mortgage. In fact, according to a report released Thursday by the National Association of Realtors, NAR, average rates for home loans fell slightly last year. The NAR's latest housing market trends report says that the national average rate for a 30-year fixed-rate mortgage decreased 0.01 percentage point in 2017. From 4.39% in 2016 to 4.38% in December. That's the lowest level since November 2013 and down from about 6% just 2 years ago. While mortgage rates did increase in late 2018, they've been relatively stable ever since President Trump took office in January 2017, and they were still below where they stood at the beginning of 2005. As of now, experts say they will likely stay low throughout 2019. We will continue to monitor the market closely, said Lawrence Yun, chief economist for the NAR. But I am not expecting big changes anytime soon. Yun said he expects the trend of lower rates to continue. When we look at the economy, we expect good things ahead, he added. Businesses are investing, consumers are spending, and job creation is strong. Low rates are great news for homeowners who need to borrow money for a variety of reasons, including buying a house, refinancing their existing loan, or paying off debt. Homeowners might even consider using a personal loan instead of taking out a traditional mortgage if they have credit issues or bad credit history. A personal loan may allow them to qualify for a lower rate. If borrowers want to refinance their current home loan, they should check with their lender first to make sure the terms of the loan offer the best deal. Many lenders offer special programs for people who plan to move or relocate. Many people use personal loans to fund education expenses, start businesses, consolidate debts, and cover medical bills. In addition to lowering rates, it's worth noting that many lenders now offer refinancing options. Before, only those with excellent credit could take advantage of these deals. Nowadays, however, any idea regardless of how long they've had their current loan or whether they have any credit problems that can apply for a new mortgage. As always, customers should do their homework before making any decision. Experts say it helps to shop around and compare different offers. You can find more information on personal loans at NerdWallet.